Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Big focus of today's conversation is going to be about that USDA report, but brought up an interesting point about the fact that there's the word intentions. We're going to talk about that when we look at these big numbers, a breakdown in what we saw, and where do we go from here. Stick around, lots to unpack on this week's report.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. As you can see, joining us, the folks from agmarket.net. Of course, we've got Brian Splitt and Jim McCormick joining us. And Jim, I'm going to kick it off to you right away, because as you and I were talking, well, all three of us were talking before we started this program, you said you got to stress that this is a report of planted and intentions. And I think sometimes we forget about that word intentions in the report.
Exactly. This is just the steps of how the government does it. Like I said, it is intentions. It was a little bit of a surprise to the trade. The corn acres were up about 1.5 million acres of 91.5. So that was more than what the trade was thinking. On the other hand, the bean acres were down, Susan, about 400,000, what was thinking. But the key to this is the intentions part, because of those acres, roughly a little over 12 million acres of beans have yet to be planted. And a little over, what was it, Brian, 3.6?
Yeah, 3.4.
3.4, 3.5 corn acres had not been planted. So when the producer gets that survey, they're asked, what are you going to plant? And even though you haven't planted it, that is what that's what the survey's asking. So when you look at how wet it was in portions of the Midwest, there is a good shot that all those acres did not get planted, and that will come into play down the line. The other thing a lot of people are asking about is because of flooding we have unfortunately seen in parts of Iowa, Minnesota, and the Dakotas. That is not part of the planning, because theoretically, those acres were planted more than likely. But where those come off is the harvested acres, and you'll see an adjustment. They left the harvested acres unchanged, but roughly on normal years, we'll harvest about 92% of what we plant of corn acres. On wet years like this, it may fall to 91 or even closer to 90%. But those adjustments will come. The next one time we could see that adjustment will be interesting. Will maybe be on that July WASDE number here in a few weeks.
So, Brian, as you look at these numbers and had a chance to digest, what was your biggest takeaway of it?
Right now, you've got the producer that still has an awful lot of ownership of old crop. Just anecdotally, we were talking with one of the principals at John Stewart and Associates, who basically does what we do, right? We work with the producer. JSA works with the commercial side of the business. And one of their largest clients, as far as basis position in old crop corn, 99% of their clients rolled their basis contract to September rather than price it. So there's still a lot of old crop ownership, and that will be dealt with in the next 2 months before the September contract goes into delivery. But the problem is going to be, and we've talked an awful lot about 2014 over the last several months, the comparisons. The market did not bounce in the month of July. We had a bearish report, which similarly we got today. We were down in 2014. And mind you, the December corn contract settled at 425 and a quarter the day of the report 10 years ago. I think we settled today at like 20 and a half or 21 and a half. So we're like right in the same price point. We went down the week after the report. We gapped lower coming out of 4th of July. So maintaining old crop ownership may not be the best decision right now. And also from the acreage standpoint, we got additional acres. Those additional acres will be put onto the July WASDE report that will add to the production. We will see if they adjust the harvested acres next month or if they wait until August. But you may have some disappointment in the market here for the next month. And I'll tell you, the December corn contract was at 365 by late July 10 years ago. So if this market doesn't turn the corner here and do it fast, the funds who are in control of the market right now, and they know the producer is out of position, they have no reason to cover their shorts at this point.
What about these wheat acres? Jim, what are you seeing kind of the friendly side of what those numbers had to say?
Well, the wheat acres, they made very little small adjustments, but the real thing surprise in the wheat acres was the harvested acres. They were actually up, and that makes sense, Susan, because you look what's going on in the Western Plains. It healed up. They've been having multiple years of drought, so the harvested acres were up a little bit. Overall, we've got a pretty big supply of wheat. I'm a little bit optimistic this wheat market's trying to put a low in. We've had that big run up there on the fear of the Russian loss of crop due to the frost and dryness. The market obviously exploded higher. We've given it all back, but we're moving past close to that halfway point of harvest. And I would look for hopefully this week to start finding some demand as well as just that seasonal weakness in as the producer finishes up harvest.
When you talk about this weather, and either one of you kind of give me your thoughts on this. A lot of folks talking about just the whole northern hemisphere is still dealing with drought, even though we got some amazing pockets here in the U.S. that are great with weather. There's the concern that this northern hemisphere issue will continue to weigh in on the trade globally.
It will. I mean, we tend to look at the drought monitor here in the United States, and it's definitely healed up compared to where we were just 60 days ago. Now, interesting enough, if you look at this week's monitor, the Eastern Corn Belt didn't go into a drought, but it did go to abnormally dry. We're going to be watching that to see how the next 10 days maps progress. I think what I saw earlier today, the European model gives pretty good shots of rain for the Eastern Corn Belt. The QPF model does the same. The GFS maybe not so much. But the one thing we're kind of looking at is what's going on in Mexico. Mexico is dealing with a raging drought. And if you notice, we've been selling a whole heck of a lot of corn to Mexico. And I think, essentially their pain is the American gain. And that is something we need to keep an eye on. And the other thing we need to keep an eye on is I think there's still a pretty good drought going on in Canada. And we know what happened last year. We had a lot of fires. And remember, you could smell the smoke coming all the way down into the mid U.S. states. And, if that would become a problem again, it's something that, some people argue kind of essentially helped, insulate the crop from the extreme heat we had last summer. Because the one thing I'd say the weather guys, they may disagree on how much rain we're going to get and where the rain's going to fall, Susan. I think almost every weather forecaster out there agrees. June was above normal temps. July is going to be above normal temps, and more than likely August is going to be above normal temps. So the rain is going to be critical.
Brian, what about somebody who's watching this report and is hearing you guys talk about these numbers and said, I still got a bin full of grain. I still have old crops sitting there that I'm holding on to. What is your takeaway on that? And what should they be doing?
Look, it's probably a little late to figure out how to fix that problem. You're losing money on those bushels at this point, unless your cost of production is extremely low. How long are you going to hold on to it? The charts are breaking down right now. Do you just let go of the bushels? If you want to have some kind of ownership just in case, figure out a call to buy. I mean, spend 10 cents, 12 cents, whatever it is, know what your risk is. But again, if this market doesn't bounce, I think people are still underestimating the amount of downside potential we could have from here. I think it's $1 in December corn from 420. I think 320 is a very realistic downside objective if this trend continues. And right now, back to the weather segment of it, as of last week, we had 6% of corn production and 7% of bean production in drought status. And that's not, severe or extreme. That's moderate drought. So we were talking numbers a year ago, spring of a year ago in 50+% part of these production areas. So it's very hard to get excited about a drought rally unless we see something absolutely extraordinary, happen here in the month of July as far as weather goes. So I don't know if you have old crop and you haven't priced it yet. It's probably on a basis contract, which means you probably just rolled it to September. And if you don't want to price it, then maybe having some kind of a September put under it is not a horrible idea. Put a floor in somewhere and hope that you wasted money on your put, because if you didn't, you're going to hate yourself in 2 months.
Hey, so one other comment on that corn.
Yeah.
Remember, folks, there's about little over 2 billion bushels of corn that we don't need as we get into a lot of part of August into September. You do not want to be the guy holding that corn when the elevator says, I'm full, I don't need another bushel, because we got it coming. Our friends over at JSA, our partners, we have a branch down there. They're saying they're going to be harvesting corn in Missouri by Labor Day weekend. They're pointing out that they'll be harvesting corn in the Delta in 5 weeks. So the clock's ticking for if you've got this old crop corn, and there was a lot more corn on the hand than what we thought, and a lot of it's in the farmer's hands. it's a situation that unfortunately the clock is ticking. Like Brian said, I think you got to be cognizant of the risk. I would argue, if you want to guess, we got maybe 2 weeks. I think you're going to see producers. We're hoping for a friendly rally today. We didn't get it. We've got the 4th of July weekend. It's not a weekend, but we got a day off holiday next week. And then the week after, you have the July WASDE. If we can't get this market to turn by that July WASDE, the 12th, I think, unfortunately, there's going to be a lot of farmers who are just going to get forced to sell it because they're just going to run out of time to be able to move the corn that's on farm, off farm before harvest begins. So it's a situation that I think, it's a bad situation no matter how you look at it, but it could get worse. And I think you want to sell. You don't want to be the last one to sell. Just keep that in the back of your mind.
Well, thank you for answering that viewer's question who asked to remain anonymous so he didn't get ribbed by some of his fellow neighbors. I wanted to ask Brian, you talked
His
before
neighbors
we started.
are in the same position too. Don't worry about it.
You're probably right. Probably right. What about this record high June cattle that we've been seeing, Brian?
Right. So you have record high prices on June. This June contract explodes into the expiration. The August contract has taken out its downtrend. The October contract, same thing. So you've got 2 contracts technically that look good. Everything else, December live cattle on out, has not been able to take out resistance, has not taken out downtrends. And then you have the problem with the feeder cattle who have yet to even take out the May highs like the nearby live cattle contracts have. We saw this same thing happen 3 months ago in March, where live cattle was quietly making new highs and the feeder cattle was reluctant to do it. And then we had a major break. So I wonder, when you look at the box beef, again, very high priced, but the amount of loads that we're selling is disappointing. It's the lowest amount for this time of year in 7 years. So is the high prices doing something to demand? You look at the discrepancies between beef prices and chicken and turkey and pork. When I get home and I ask my wife what's for dinner, and she says, well, chicken. And I'm like, all right, chicken. You go to the local store or the restaurant, and what's on special? It's cuts of pork. So they're not featuring beef specials anymore. And this is just stuff I'm seeing locally. So is demand changing? Are we starting to shift demand to some of the cheaper protein sources? And so was this a blow off in the cash market this week? I feel like it might have been. We'll see how things look as we progress towards the August contract, but I'm very concerned about the downside in live cattle. And you look at the price of calves that we're putting on feed here at these prices, that's your basic input, and it's extremely high. And I kind of liken that in my mind to the price of inputs for corn last fall. And you had an opportunity to lock in profit when you were buying those high inputs. And if you didn't, look at where we are now. So I feel like if you're buying these high priced calves, you got to do something to protect your downside, because I do think it's very real.
Well, gentlemen, it's been a great conversation with both of you. I wish we had more time to talk. Folks want to have a further conversation. What's the best way to get a hold of you guys?
Look us up online, www.agmarket.net. We have a general phone line, 844-4AGMARKET, so 844-424-6758. I'm 815-665-0463. He's 815-665-0461. Call us. We would love to help you out.
All right. Thanks so much to the guys at agmarket.net, Jim and Brian. We appreciate it. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. That's been this week's Nebraska Soybean Board Weekly Market Roundup.